Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Anushi Vakaria. We'll take you through the next 1 hour of trade. At the start though of this Ask Profit special, we've got an IPO special lined up for you because today is a fantastic day for the IPO markets. You've got 5 listings that have taken place already, and what a stellar listing it is for a couple of them. In fact, let's take a look at how these stocks have reacted, making their Dalal Street debut. You have the likes of Dam Capital, you have Sanatan Textiles, you have MTA Machinery, you also have a couple of others in the form of Transrail Lighting and Concord Enviro Systems, all of them trading in the green at the start, and MTA Machinery stands out, gaining as much as 150-odd%. In fact, more than that at this juncture, 160% or thereabouts. Sanatan Textiles also listing at a gain of about 31%, coming off the high point just a tad bit, but still trading with gains of about 25%. Of course, we'll come to the market in just a bit, but like I mentioned, this is an Ask Profit IPO special. So in the event that you've got questions about any of these companies or indeed the companies that have listed over the course of 2024, then I would invite you to write to us on that number that you see on your screen. Or in fact, over the course of this next half an hour, you can call us and we'll speak to you directly. But let me introduce Paresh Dattani, who's the chairman and managing director of the company Sanatan Textiles, joining in. Mr. Dattani, thanks so much for taking the time and congratulations on a stellar listing. Help us understand at the start, of course, this is well documented, but people who are tuning in for the first time, how are you going to use the IPO proceeds?
Morning. Thank you for having me on the show. We have a primary issue of 400 crores and we'll be using 300 out of that to pay the debts. 160 crores will be paid of the current company debt and 140 will be from the new debt we have taken for the expansion project which is on in Punjab.
Hi Mr. Dattani, this is Anushi joining in. Want to understand, so you've mentioned about in the use of proceeds that firstly the debt picture is something that we should be watching out for. Along with that, the manufacturing facilities. I want to understand what is the kind of interest savings that we can see from here onwards after the repayment of debt that there is on the cards from FY25 picture. What is the debt scenario going to look like?
Well, today, when we started this journey, we were at a debt of 0.3 to EBITDA. We, at the end of 2025, we will be holding a debt of close to 900 odd crores on the book. When we finish the project, net debt after paying from the IPO proceeds, we'll be having a net debt of about 1,000 to 1,100 crores on the books. With the expansion coming in, 1 year forward, going forward, when the full project, the new expansion is on fully, we will be at a net debt to EBITDA as 1, which is very comfortable for us.
Sure. Could you take us a little bit through that expansion as well and the timelines therein? As I understand it, Mr. Dattani, it's not the best environment globally. You've seen exports decline as a percentage of the whole. Does that change over the course of the next financial year?
See, as far as Sanatan is concerned, on the export side, we have constantly moved between 5% to 15-16%, depending on better netbacks. If we are better locally, then we move the needle a little bit to the local. That's the variation that and I think going forward, we will be close to about 10-15% on the export front. As far as the expansion that is on in Punjab, we are adding, at the current capacity, we have in all the 3 segments going forward, we have a capacity of 223,000 metric tons per annum. Going forward, out of this 223,000, 2 lakh tons is polyester filament yarns. What we are setting up in Punjab, we are going to set it up in 2 phases. On the first phase, which we'll be commissioning this year entirely, and we'll be adding 255,000 metric tons per year. And in the second phase, we'll be adding another 100,000 metric tons per year. So that will take us our total filament yarn capacity to over 550,000 tons. On the cotton yarn front, we are today producing 14,000 tons per annum, and we'll be adding another 10,000 tons to that.
Well, that's fair to understand, Mr. Tatari, but considering these capacity expansion and the export mix going higher, what is the revenue and the margin picture that we should be looking out for in the coming years?
As far as our Punjab expansion is concerned, ma'am, we are setting it up there because it's an entire market which is there, which is already there about 1 million tons a year. We are setting up about 25% of that. So it's a set market for us. We are already supplying to the market there, and we have a market which is ready-made, laid out for us. So nothing from there will be on the export front. But yes, going forward on the Silvassa plant, we will be increasing our exports. Whatever we were selling up north, we will push it to the exports and increase the export percentage share.
Just a last point that I want you to leave us with, just a picture of how the industry is likely to be next year. What is the kind of pressure that you have, if at all, on the pricing front? Will you be able to improve margins on that front? Is there any pressure that you are dealing with right now? Do you see that easing out in the next financial year? And is 26 going to be, or rather is 26 going to be better than 25?
Yes, we have been consistently doing, if you look at last 3 or 5 years, we have been doing an EBITDA of about 9.78%. We will be close to that this year, and going forward we are on course to improve our EBITDA. We are trying to work on that once the new project in Punjab gets moving along. And we hope to commission that. We start commissioning that by end of March, April. And it'll take us about a quarter or so, or maybe a couple of months to ramp up the entire facility there. That will help us improve our margins also.
Fantastic. Mr. Dattani, exciting times for you, and congratulations once again on a stellar listing, and look forward to speaking to you in the new year.
Yeah, thank you very much, and I want to just take this opportunity to thank all the shareholders, and that only motivates us and my team to work harder in the future, and we are going to do that.
Fantastic.
Thank you very much.
Thank you so much, Mr. Dattani. All right, like I said, this is an opportunity for you to ask questions on IPOs. You can talk about the latest listing that we just spoke about, or any others. We've got Ashish Maheshwari, Director at Arihant Capital, joining in, as well as Kushal Gandhi, who's Technical Analyst at Stocksbox. Thank you so much, gentlemen, for taking the time. Before we get into IPOs and a few of the questions that come through, very quickly, Kushal, I want to come to you on how the market's looking right now. Globally, we're seeing a little bit of a tepid scenario in terms of participation. What is a kind of picture that you have heading into the end of the year?
So far, the markets look muted. I'm not expecting much of fireworks as of now. Over the last 3 days, we've definitely seen some volatility compression. So we're seeing a positive outlook, as a result. But I feel 24,200 is a very critical resistance going forward. As far as, we successfully and decisively close about 24,200, we might see an uptick towards 24,800. But again, markets have formed an intermediate top near 24,800. So I think 24,200 and 24,800 are two levels to watch out. If we are failing to sustain beyond these levels, if we fail to sustain above these levels, we might see some selling pressure continuing.
We've got one question coming in from Rajan Iyer. Rajan, I'll come to you in just a bit, but interestingly, it's being called 2024 is being called the year of IPOs, and the reason why is that we've had 1.8 lakh crore rupees that has been raised in mainboard IPOs in 2024. 95 mainboard IPOs during the course of the year, and that's quite a stellar number. Of course, considering the kind of participation that we've seen from you, the retail investor, it's very important that we get additional supply, and so from that perspective, it's a very good thing that we're seeing so many new companies coming through. We've got the first question, as I mentioned, coming in from Rajan Iyer. He's got Afcons, which he got allotted during the IPO stage. He's looking for the prospects. Ashish, did you track this at the IPO point? Did you have a note out, or did you look at the coverage of this company? And if so, what is the kind of view that you have? Would you hold on for the next 3 years?
It's a Afcons
infrastructure
issue was concerned. Yeah, so from 420 rupees, I think was the IPO price, and in spite of not that encouraging oversubscription, which generally these kind of companies get, I think stock has done reasonably well. I think issue price was 463, and it came into the discount also. I think touched 420, but it still now managed to do well because ultimately the institutional investors are understanding the size of Afcons infra operations is quite large. If you see typically wherever L&T bid for higher value contract, even Afcons is also one major player in the same segment, and they bid shoulder to shoulder with for larger projects. So fundamentally company is good, and in my view, if you are bullish on India infrastructure spending and particularly government spending, and Afcons will continue to do well. So my suggestion will be, if you are allotted shares in IPO, remain invested, and maybe next 1 to 2 years is a long term very good growth story.
So a positive view that we are seeing for Afcons, the suggestion that one should continue to remain invested in this. Another IPO query, this is on the recent listing, today's listing in fact. Karthik from Pune wants to know if it's the right time to add more to DAM Capital. He got allotted one lot in the IPO. Ashish, coming back to you on this one. What's your view on DAM Capital? It got listed at a 39% of premium today. Should he continue to add into this position?
See, even if we see DAM post-listing, I think the still market cap is 600 odd crores. And the way we have seen other players in this segment, and let's talk about Nuvama Wealth, the kind of valuation, or Anand Financial Services, the kind of valuation they are doing or they are fetching from the market, DAM will certainly do much better even from here, because they are having very good pipeline of IPO, because last year it was 1.6 trillion rupees IPO. Now next year is going to be 2 trillion Indian rupees IPO. So their business is very flourishing in nature, and very good pipeline these companies are going to have. So DAM Capital is certainly a buy again in my radar, and in my view, this stock has even potential to give 50% upside in next 1 year from here.
From this point, and the stock is up as much as 50% on listing day. A question coming through from Satya. It's not really a specific question on an IPO, but Ashish, of course, we've seen tremendous oversubscription. Even the 5 listings that took place today, all were oversubscribed, the least of which was an oversubscription of 10.7 times. What he's asking is, how does he increase the chances of getting allocated during an IPO? And I think this is a question that a lot of people have. So they tend to use as many accounts as they possibly can. I've heard this in a household. They try from 4 or 5 accounts if possible, and they try and get an allocation. But the question he's asking is, should he try in the HNI component, where you have sub-limits within that as well? I think 2 lakh is one. And you have the retail component, which is a better opportunity. I guess it would depend on the IPO.
Yes. Also, like there's a retail, there's SHNI, there's a BHNI, there are 3 segments there. So even the probability goes up when you upgrade yourself from retail to SHNI or BHNI, because there's a 2 lakh limit, then there's a 10 lakh limit. So the higher you go, the probability goes up. But I think the best will be to have demat accounts and of all your family members, and apply in multiple code, because it's a lottery. So if you'll apply 5, 10 and at least numbers, then you have a probability of winning that lottery. This much I can say, but there's no other formula other than applying in multiple codes.
Right, that's an interesting take that you have there, Ashish. But the focus today remains on the IPOs which have marked its debut on the exchanges today. Tanvi from Jaipur has got allotted one lot of Transrail. And if you look at the Transrail performance, it got listed at a premium of 37%. Wants to understand whether she should continue to hold on to this one or sell. Ashish, coming back to you on the IPO related question on Transrail.
Yeah, Transrail again has given a quite decent return. If it's 32% upside is there, and even much higher than what the grey premium was, around 100 rupees, and stock is up by 139 rupees. And again, a very good company as far as Transrail Lighting is concerned. And they are not only focused only India, but they are doing a lot of projects in Africa and other part of the world also. And this is not a lighting company; they do projects related to construction of this tower, transmission towers, etc. So if you ask me, again a good EPC company and good management also. And in my view, this is again a stock which you can continue to hold for a longer run, because of the kind of return we have seen in Tata Power and KECs, etc. Transrail will also continue to do well in long run. So don't be in hurry to book profit. Remain invested in quality stocks.
Okay. Enviro. Okay, so we're talking about Concord Enviro Systems next. I'm not actually sure. Let me actually try and pull this up. In the meanwhile, if we can just very quickly take another question. I'm talking about Enviro Infra Engineers. Sorry, this is a different one. Yeah. So Enviro Infra Engineers IPO. We've got Hemendra Nanavati, who's got the next question. He's asking on WhatsApp. He's got 1,414 shares in the HNI category, and he's still holding. Coverage on this, Ashish, have you looked at Enviro Infrastructure Engineer?
Yeah, this was again issue where a lot of investor interest was there, and it was given at quite attractive valuation also. So if I see the numbers wise also, they have just doubled their profit from 23, 24. They did almost 100 crore. Even their last quarterly numbers also came, which were also quite good. And if you see their company, the company profile, they are into waste water management. So they take projects from municipalities and do those kind of projects. They have also raised money for a big project which they have got in Mathura, from Mathura municipality, etc. So company is doing well in my view, and this is a sector where we have seen excellent return from Vartech, Babak, etc. And not too many competitors are there in listed space. And in my view, this is again a stock very good for the longer term portfolio.
Staying with this theme, now you've spoken about Enviro Infra, you've compared it with peers like Vartech, Wabag and all that. Another listing which marked today was Concord Enviro, again in the same space that we are seeing at. Is this the right time to buy Concord Enviro? This is what Priyanshu wants to know. So in the peers, in the wastewater and sewage plant system, if we see, which is the best pick according to you, and if you can give whether this is the right time to buy into Concord as well?
So Concord Enviro, only one problem was that the issue was priced quite rich. So if you see, it was a pre-IPO, it was offered only also at 30 price earning multiple. So whatever the maximum upside was there, this was already captured in the IPO price, and this is the reason issue was oversubscribed by only 10 times. Still, I'm happy to see these kind of gains, because before listing it was expected it will open at 70-75 rupees premium only. So my suggestion will be to keep a stop loss here, maybe at 800 rupees, and you can continue to hold.
That's the view on Concord. Kushal, sorry to keep you waiting. Unfortunately, I mean, very little in the way of data that you have about these new listings, but I will ask you, question from my end. Listings perhaps in the first few months of 2024, anything is looking attractive at the current level, something that you have enough data to talk about?
So in the recent times, we've been very bullish on the young guns, and as disclaimers, we've been pitching a lot of the IPO ideas in the recent time, and they've been doing fantastically well. So I feel going forward, something like Enviro Infra can do well. After a 90% significant rise, we've just seen a 23% correction. So I think it's a very classic sign that the savvy investors continue to hold their positions. So we're bullish on EIEL going forward for the target price of 388, and we advise to maintain a stop loss at 306. Another stock idea is Arcade Developers from the IPO space. Again, it's forming a nice IPO base with a cup and handle formation. So, some strong technical evidences for the stock to trend up. So bullish on the stock for the target of 190 followed by 220, and we recommend to maintain a stop loss at 160.
Okay, fantastic. All right. It is time, I think, to shift gears and move back to the secondary markets and stocks that have been listing for some time, because quite a few of you actually, I have one more question. Dr. Ravinder is writing in from Nandyal, and have we spoken about MTA Machinery?
No, absolutely.
We haven't.
Yeah.
So incidentally, this is a question from Dr. Ravinder, who's writing in from Nandyal, and he's asking about MTA Machinery. He says that he's gotten allocation. Should he hold or should he sell? Listing gains of 159%. I can't remember the last time that I said this. What's the view on the fundamentals? Ashish, is there potential for even more gains from this point?
If you see even subscription wise, 49 lakh number of applications this company has received in IPO. So you should be lucky that you have got a stock of MTA Machinery. And if we see business model also, they are making machineries which are used in for making pouches and packing bags, etc. And they are not only an Indian player; they are global player with a lot of exports they are doing in various parts of the world. So very niche player, and not many competing players are there which can match profile of MTA Machinery. So in my view, you should remain invested in MTA Machinery stock, because wherever there's some nicheness is there, they get a lot of premium even going forward, and they attract higher price earning multiple also. So my suggestion will be to remain invested in MTA Machinery.
Did I ask you about Sanatan Textile? I'm not sure. We had the management, but did I ask you about it?
No, we haven't spoken about it.
Okay, so there is a question, when to sell? Mustafa is asking when to sell Sanatan Textile. Would you say that listing gains 20+% is a good opportunity to sell?
If you ask me, like, first of all, this shows now that investors are even going to look companies in textile, which is considered to be a commodity business, if the size is there. Sanatan is again a company where decent size is there. If we see the polyester yarn capacity, they'll have almost 5 lakh ton, and the leader, which is a Reliance Industries, having 2.5 million ton capacity. So if size is there, certainly investors will like to buy the stock, and which is the thing that in this IPO, this is the reason so many investors have applied. In my view, you can keep a stop loss of say 375 so that you don't miss out on those listing in, and then continue to hold the stock.
We've got an interesting question, and this is not something that we normally do, I must point out. We stick to one query, one stock per viewer, but then since I've invited questions on IPOs, we've got a number of stocks, Ashish, that has been mentioned here, right? This is Kamla Yamanuri's question, and she's picked up allocation in a number of IPOs. You don't need to speak about all of them, but things that stand out to you that should be held. She's got CE Water, she's got Bajaj Housing, she's got PN Gadgil, Vishal Megamart, IGIL, and Tata Tech. Each one lot, I think, each, right? So should she hold on to these? Which of these should she exit?
I must congratulate very lucky investor.
I agree.
Almost wherever their miracle is stone in their hand, wherever they put in money is made, or they get IPO location as something really.
You know, Ashish, they say in, I don't know which language, but my grandfather has spoken about this. It's Kaipunya, right? So you have blessed hands. When you drop a seed, a plant grows. This is effectively the case in the primary market.
Yes, because I have yet to cross someone like who has got so many allotments. So I'm assuming he's having many family members. That is why they are applying in many names and getting so much allocations. Anyway, so I think my top picks will be again here the PN Gadgil and Vishal Megamart. In my view, you can continue to remain invested. And IGI, I think also they got allotted. Yeah, so IGI will be my third pick here because this is again a very unique company which is having monopoly and certification of diamond quality, etc. So they will also continue to do well. So in fact, if you ask me, all the IPOs which you have got are of good quality companies, but these three are my pick in long run.
All right. And maybe at some point, Kamla, you can send us a message telling us how you figured out getting allocation in all of these IPOs, or maybe you'll keep that a secret, who knows. If you want to share it, do let us know, and I will tell the rest of our viewers after this very quick break. Ashish and Kushal, do stay with us. We'll be back on the other side to take all of the other questions. By the way, we'll be opening up the phone lines and the messages, of course, for you to take questions on existing shares or basically secondary market questions. We go back to the normal Ask Profit after this very quick break. Do stay tuned.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes.
जनता के प्रति, देश के विकास के प्रति उनका जो कमिटमेंट था, उसे हमेशा बहुत सम्मान से देखा जाएगा। डॉक्टर मनमोहन सिंह जी का जीवन उनकी ईमानदारी और सादगी का प्रतिबिंब था। वो विलक्षण सांसद थे। उनकी विनम्रता, सौम्यता और उनकी बौद्धिकता उनके संसदीय जीवन की पहचान बनी। मुझे याद है कि इस साल की शुरुआत में जब राज्यसभा में उनका कार्यकाल समाप्त हुआ, तब मैंने कहा था कि सांसद के रूप में डॉक्टर साहब की निष्ठा सभी के लिए प्रेरणा जैसी है। सत्र के समय अहम मौकों पर वो व्हीलचेयर पर बैठकर आते थे, अपना संसदीय दायित्व निभाते थे। दुनिया के प्रतिष्ठित संस्थानों की शिक्षा लेने और सरकार के अनेक शीर्ष पदों पर रहने के बाद भी वो अपनी सामान्य पृष्ठभूमि के मूल्यों को कभी भी नहीं भूले। दलगत राजनीति से ऊपर उठकर उन्होंने हमेशा हर दल के व्यक्ति से संपर्क रखा, सबके लिए सहज उपलब्ध रहे जब मैं मुख्यमंत्री था तब डॉक्टर मनमोहन सिंह जी के साथ राष्ट्रीय और अंतर्राष्ट्रीय अनेक विषयों पर उनसे खुले मन से चर्चाएं होती थी। यहां दिल्ली आने के बाद भी मेरी उनसे समय समय पर बात होती थी, मुलाकात होती थी। मुझे उनसे हुई मुलाकातें, देश को लेकर हुई चर्चाएं हमेशा याद रहेगी। अभी जब उनका जन्मदिन था तब भी मैंने उनसे बात की थी। आज इस कठिन घड़ी में मैं उनके परिवार के प्रति अपनी संवेदनाएं व्यक्त करता हूं। मैं डॉक्टर मनमोहन सिंह जी को सभी देशवासियों की तरफ से श्रद्धांजलि अर्पित करता हूं।
Prime Minister condoling the loss of Dr. Manmohan Singh. We've been speaking to frontline voices from the markets, from the banking sector, former governors of the Reserve Bank of India speaking to NDTV Profit all morning, speaking about the architect of India's modern economy, India's liberalized economy. It is perhaps because of what happened in 1991 that we're seeing what we're seeing today. India at the 4th place in terms of the size of economy, 4th largest economy in the world, 7 times the size of what it was in 1991. By the way, we have opened the phone lines and we've got our first caller for the day on Ask Profit, and we've got Gopal who's been waiting by. He's called us from Bengaluru. Gopal, thanks so much for your patience. How can we help you today?
Thank you. Thank you for taking my call. I have a share, Asian Paint share,
yes,
of around 181 at the price of 3190.
Okay.
I wanted to know when should I buy it to average out, because now it is almost 2,200. I'm waiting like whether it go below 2,200 or should I buy at current price?
Okay, help me understand a couple of things, Gopal. Over what period did you acquire this and what was the thinking?
It's almost a year, more than a year now.
Okay.
Because I bought it for a long-term basis.
Oh, and how do you define that long-term?
It may be like 2 to 3 years.
Okay. Okay, and you don't have any of the other paint companies, right?
I had, but I sold it out.
Got it.
Like Indigo Paint I had, so that I sold.
Okay. Okay. Ashish, this is a question on the fundamentals. Bought Asian Paints at elevated levels, and I think a lot of people have done that. This is something that was considered a portfolio stock. People are questioning that at this juncture. It's down about 33% odd in 2024. Would you suggest an entry at this point? Would you suggest an alternative strategy?
No, I'm bearish on Asian Paint for quite some time. Again, the reason is Grasim, Opus Paint, because the way they are entering pan-India and eating the market share, they will only give more and more dent to Asian Paints, because Asian Paint is again in decorative segment and Grasim is also in same segment, and Grasim has a very wider reach and deep pockets and the kind of incentives they can give to last mile dealers network. Asian Paint, because up till now they've enjoyed monopoly kind of position in this, so they will not go to that extent which Grasim is going or can do. So this is the reason I'm quite bearish on Asian Paints. In my view, the kind of performance which was there in September when net profit just became half from June quarter, this kind of trend will continue, and now growth is very difficult for this company. So my suggestion will be, instead of Asian Paints, you make some position in Grasim for next 2-3 years target. Next to at least for a couple of years, you will see surely 3,200 plus in Grasim in next couple of years.
Bearish view that we have on Asian Paints, but with that we have another caller joining us. I believe it's Ajay from Andhra Pradesh. Hi Ajay, how can we help you with?
Ajay, can you hear us? Okay, we've lost. Let's go to the next WhatsApp question that we have.
In fact, we have another question from Rishabh from Mumbai, and he's holding about 402 shares of Tata Power. This is at a price of 428 and wants to understand whether he should continue to hold on this one or sell this. Kushal, I'll come to you for this. What's your outlook on Tata Power? How does it look on charts?
Well, looks, it's been exhibiting a sideways trend, but again, the levels of 400 to 390 is a very excellent demand zone, and we've seen multiple pullbacks from this area. So I would recommend to hold this positions with strict stop loss near 370. And yeah, I mean, if you're seeing some up move above 445, we might see further upside towards 490 odds.
The next question is on Time Technoplast, and this is a question from, okay, I'm not able to get the name, Muiz Ansari. Muiz Ansari's got this question. He's planning to hold for 10 years. Is it worth buying at this current price? The stock is up as much as 170% in 2024 alone. Ashish, on the fundamentals, would you buy right now?
See, as far as fundamentals are concerned, they are quite robust. If you see live in the last 2 quarters, they made around 170 crore kind of profit. And at a 10,000 crore market cap company making almost 350 crore profit is quite reasonable. Besides this, one big breakthrough which they have got is the fiber-made CNG cylinders. So you don't need that steel or metal cylinder anymore. It will be more fiber-based cylinders where they've got breakthrough, and there's a talk for QIP coming soon in Time Techno also. So multiple triggers are there, and if you are a real long-term investor, continue to remain invested.
Okay, well, that's a view for Time Technoplast for a long-term perspective. Now, moving to the next query, it's from Nitin Paul from Ooty. He bought Indian Hotels at a price of 180. This was during COVID. He's already sold about 50% at profit of 700. So we're seeing quite a bit of profit, a long profit in this one. Wants to understand whether he should continue to hold to this levels or buy more for long-term. Coming to you, Kushal, on this one, what's your view on Indian Hotels, whether he should continue to add in this position?
I would invite him to sort of just keep holding his position and not to average or probably add more positions at this current juncture. The stock looks a bit extended, so I anticipate a minor pullback towards 805 to 800 levels. So I think that's an ideal level to enter, which would also offer some lucrative risk to reward opportunity.
Okay. I'm guessing you don't have a view on Sanatan Textile, right? Kushal?
No, I don't.
Yeah, I that's what I was trying to tell one of our viewers who's seeking a view, Mustafa. Mustafa, it was listed today. Obviously, we're going to have to wait for some time for Kushal to have a view. Meenu from Trivandrum is asking for which pharmaceutical company is a good pick at this juncture for the long term. And several come to mind, but what Ashish is picking is a question. Ashish, which would you pick right now?
See, there are so many options are there in this pack, but I like to go with the frontline companies only. So my session will be to look at companies like Natco Pharma or Orion Pharma, where I see good potential because the kind of their new drugs pipeline is there, and the numbers which are coming, they will give you much better return compared to other pharma players.
Something like a DRL or a Cipla?
Yeah, they have also done reasonably well, but in my view, my picks will give you much better return.
Understood.
Understood.
Natco, you see, they've given 70% return in last 1 year.
Yeah, true.
So the next, if you are looking at moving from the pharma space to the IT space, the next question is from Deepak from Noida. He wants to understand the long-term view for LTI Mindtree. He's had 50 shares. This is at an average price of about 3,500 accumulated over the last 7 to 8 years. Again, wants to understand from a 3 to 4 year perspective whether he should add more in for long term. Ashish, coming to you on this one. What's the view for LTI Mindtree?
Yeah, LTI Mindtree again over a period of time has delivered very good returns also, though from 6,700 mark where that we have seen stock is languishing in this range and has not given very good returns, because anyway this sector in this sector, if you see, except few frontline and few mid-cap stock, none of the stock have given any sort of return. Like last 12 months, your chart is also showing -9% kind of return. But again, company is doing well, nothing wrong fundamentally. Only thing is sector is not in that great demand, and this is the reason this stock is also languishing between 5,500 to 5,900. But long-term prospects are quite intact in this company. So keep a stop loss of 5,400 and remain invested.
Hold on to LTI Mindtree. It's had a rough month of December. Kitex Garment is the next stock we're talking about, and this is a question from Pradeep Kumar. He's calling us from Kerala. Morning, Pradeep. How can we help you today?
Good morning. How are you, sir?
Very well, sir.
Thanks. Actually, I would like to know more about, little about the Kitex. I think I bought from the top, and recently, it's falling down like every day. Yeah. So it's the best things to keep or sell, or need to add more.
Okay, because the stock is done incredibly well. You seem to have caught the top, as you've pointed out. What was the kind of outlook that you had? Did you plan to hold for less than a year, Pradeep?
I don't mind, because right now I think I lost a little bit over in my target. So the best thing, I would like to take a decision from the people from you. Take a decision to sell out or buy to make an average.
Got it. Okay, so I got your question, Kushal. Let me come to you on this stock. He's bought at levels of 860, elevated levels, as he's pointed out. Would you buy at the current juncture and average your cost, or would you hold? Would you exit?
Advise him to exit his positions because simply if you see the stock has almost gone up over 300% since August lows, and right now the intermediate trend it's becoming weaker. So I feel that the selling pressure might continue for a while. So I would sort of advise him to exit his position at the current market price.
Okay, Kitex Garments. With next, moving on to the next query is Satyajit from Bengaluru. He wants to understand the outlook on Ceat. He's purchased it at a price of 3,271 and wants to understand the approach forward. Ashish, coming to you on this one, there have been quite a bit of headwinds in the rubber industry for tire makers in general. What is your view on something like this?
Before this, can I add some one more point for Kitex Garment investor, like if he is still online?
Okay. Yeah, please go ahead.
So one mistake that all investors typically do is whenever the momentum is there in the stock, we try to onboard at that time. Like Kitex Garment also, you bought at the peak because at the time news related to Bangladesh, exports related issues, etc. came. That is why we entered this at this price. So typically retail investors should not try to onboard the stock when the stock is at 52-week high or when some positive news flow is there. So if the news flow is there, then you can only do trading. The best time to buy Kitex was when it was languishing at 200 rupees, because you are also from Kerala and this company is also from Kerala, so maybe you know more about it. But never buy a stock from investment perspective when stock is at 52-week high is my point of view. So otherwise we always will remain stuck in these kind of plays and take plenty of time to exit. Now, as far as Ceat is concerned, again, this is a stock which has given very good return to investors in last 1 year, and one of the best performer, I think, this stock after MRF. And these tire companies will do well because again, rubber prices are quite in control, and the way this two-wheeler, four-wheeler and EV segment is again picking up. Tire is something like which is now consumption theory, and this is the reason these stocks are doing well. Though stock value has appreciated in last 1 year quite a bit, but fundamentally a good company to hold in long-term portfolio.
All right. S. Radhakrishnan is calling us from Mumbai, and he's got an interesting question on BSE Limited, which he's bought at an attractive price. I'll let him tell you about it. Radhakrishnan, good morning. And when did you start acquiring BSE? Congratulations on the kind of wealth that you've generated.
Thank you so much for taking my query.
Actually, I have a question with two parts.
Okay.
The first, I would say, I bought this around 850, almost a year ago, and there was this thing. I had around 200 shares.
Yes.
And in another account, I have another 200 shares.
Okay.
When the buyback was on offer, it was around 1,080, if I recall correctly. That was the buyback price.
Okay.
So I offered one lot of 200 from one account.
Yes.
And the normal thing is, what happens is they take about 8 or 10 shares maximum. But in this case, what they have done is the entire 200 shares have been taken away.
Okay.
There is no communication from BSE. Normally, a letter comes from the company that offers a buyback, that we have taken so many shares from you under buyback scheme, and the remaining are credited to your account.
Right.
Now, I have not received any intimation from BSE Limited.
Right.
I tried taking up this issue through SEBI also, but there is no response.
Okay.
What am I supposed to
but
do?
did you get the amount? Was the
amount
amount credited? The amount was credited.
The amount has been credited. Yeah. But normal course, no company, takes almost 100% of the buyback.
Did you tender all 200 shares?
Yes, I did.
Okay.
The idea was to give them 200 so that normally they take 8 plus 8, maybe 16 shares.
I understand that. But then if you think about it, and if you were to think about any other market, Mr. Radhakrishnan, you would say that if you were selling 200 units of a product, and if you said that you would put all 200 units on offer, and if a buyer were to take all 200, you can't possibly say that, no, I intended to sell only 15, but I put 200 up. So, but
I'm absolutely not disputing that, sir. I'm not disputing that. They have every right to take all the 200.
Yes.
But this has never happened in the past. As far as my knowledge of the share markets go, this has never happened in the past, number one. Number two, there is a lack of transparency on the part of the company that is buying the shares back.
Okay.
They have not communicated anything, how much they have taken. So how am I to know whether the company has taken or some intermediary in between has gobbled up?
I get your perspective. And since I am not as experienced as even perhaps you are, or even Ashish is, let me go to Ashish on how to deal with something like this. Ashish, is this something that you've come across? And what is the recourse here? Is there a recourse?
No, it is again a surprising fact, because whenever company do a buyback, they do proportionately. So I agree with the investor. It's like he has also not come across to such instance earlier, because if 100 shares are tendered, and like you can always get these shares totally buyback if number of shares are less, and the company wanted to buy more. So, but I think that issue was oversubscribed, because it was last year, if I recollect, in September 23. So first of all, like there's no intermediary like who can do, some sort of manipulation that to get your 200 shares, they will do all those things. Only thing is we need to take up this with company only, that is BSE Limited, that you need to write to them. Also there's investor grievance cell number, which is also given, and their email ID is also there on the website, where you can post this message like whatever happened with you. And as there's a listed company, so they need to disclose in their quarterly disclosure whatever investor grievances were there, and whether they are resolved or not. So I'm sure you will get reply. Just write to investor grievance cell of BSE.
Fantastic. I hope that answers your question. Of course, we've probably not been able to resolve it to the extent of what you were looking for. But very quickly, let me ask you, Ashish, if you bought at levels of 850, would you hold on at this juncture? We're talking about significant gains right now.
Yeah, I think exchange stocks are duopoly. If you see BSE and SE, there are only two options in India to trade. And the way trading culture is now increasing in India and Indian context, and the way money is being raised, you can't go wrong in exchange stocks. Though this Metropolitan Stock Exchange news, etc., has done some damage in the price in short term, but in my view, this is a very good long-term play, and you can surely hold this for 6,200 rupees, which is my target in 2025.
Got it. Mr. Radhakrishnan, of course, we've probably not been able to answer the question that you had with complete clarity, but hopefully this has helped you in any case. Manoj has got the next question. Manoj is calling us from New Delhi. Hi Manoj, how can we help you today?
Yeah, hi. So I have one question regarding Bajaj Housing Finance Limited.
Yes.
Yeah, I have this shares for 500 shares I have at 153.66.
Okay.
And yeah, currently I am at a loss right now. And today, as of now, it is trading at 127.45.
Yes.
I can hold it for a long term. But I'm not sure about how long I should hold and what should I do with this current stock.
Manoj, what is the definition according to you of long term?
Sir, I can hold it for around 4 to 5 years.
Okay,
probably.
so it's very long. Okay, and when you bought it at 153, 154, what was the thinking? Did you like the company? What the company does? Did you look at the fundamentals of the company?
Yeah, so actually I have association with Bajaj Finance and Bajaj Finserv. So I have these stocks. I'm already in profit on these stocks. So being from the same family, I probably betted it on that it can give me a return in long term. But right now, it has been a constant downstream since then.
Yes, no, that's a fair point that you're making. Let me take this question to Ashish. Ashish, you kind of made this point already earlier on in the program with another stock, but Bajaj Housing also bought at slightly elevated levels, 153 or thereabouts. But the perspective is for the next 4 years. Would you use opportunities where they arise to accumulate more of this stock?
See, there are a couple of things. One thing is from the IPO price, as the oversubscription was so much, there was euphoria to buy this stock like there's no tomorrow. If you recollect the first few days of trading when a stock almost touched 185, 190, I don't know what price it touched. And from that time, we have seen those who were smart investors, they offloaded it. Because the price to book value, first of all, it was already offered at very high valuation. And when you are getting a price to book value of 20 times and I think 18 or 20 times when it reached that peak, it was very overvalued only. And from that level, we have seen that institutional players exited and retail player mobbed this stock, assuming this will go to 300 in short term. So this is the pain. So until unless somebody will start accumulating the stock, stock will remain under pressure. So maybe in my view, this stock can even drift up to 110 or 105 also in coming time.
Got it. So that might be a better opportunity to look at. It is time to hit the rapid fire segment, gentlemen. Kushal and Ashish, this is where we throw as many questions as possible at you over the course of 2 minutes, and hopefully we can answer as many as we can. Kadir has got the first question. Century Ply is the stock that we're talking about. Bought at an average price of 300. Long-term fundamental view is sought. Would you hold, Ashish?
Hold, certainly a very good company.
Okay. Jamna Auto want to invest 2 lakh rupees. Jitendra wants to know, Kushal, on the charts, would you invest 2 lakh rupees at this point?
No, it's definitely avoid.
Avoid. Titagar Rail is the name of the counter. Vijay Reddy wants to know, thinking of holding, buy price is 1,114. Would you hold on, Ashish?
Yeah, I'd like to remain invested with a price target of 1250 in mind.
Okay. Coal India is the name of the counter. Ankush wants to know, he's bought at a price of 450 rupees a piece. He's looking for an outlook for the next 1 to 1.5 years. Kushal, on the charts?
Negative view as of now, but I would want to sort of start investing once the stock closes above 460 odd levels.
Okay. Bharat Thareja wants to know about JSW Steel, bought at a price of 1,052. He's got 200 units of the stock. Stock is currently trading below his buy price. Would you hold, Ashish?
I'm not that bullish on metal pack, so I like to exit.
Okay. Zomato's the name of the counter, bought at levels of 47. Wow, that's a great buy price. Would you hold? Long-term investor Sanjay wants to know whether to hold. Ashish?
Yes, I like to remain invested in Zomato.
Okay, Amber Enterprises, it's currently trading at 7,000 plus. Would you buy at this point? Manikanta wants to know, Kushal, on the charts, would you buy?
On some pullback towards 7,000 odd levels.
Okay, that brings us to the end of this edition of Ask Profit. Thank you so much, gentlemen, for taking the time. And viewers, thanks so much for tuning in. Do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Hello and welcome to KYC, a brand new show on NDTV Profit. And in this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep comprehensive understanding of the companies they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And today, we talk about technology company Orion Pro. Now, talking about Orion Pro, this is another one of those companies which has actually done very well over the course of the last many years. And in terms of focus, as I've already mentioned, that the company is in the technology space. In fact, it is a global provider of IP-led products, platforms, as well as services. And well, essentially, in terms of what it does, it enables enterprises to accelerate that digital innovation. Moving on, if you just consider what areas it focuses in, well, it serves the banking, mobility, payments, and the garment sectors. And that said, even in terms of your overall revenue pie, we have software services contributes to about 2/3 of revenue, and the balance comes from equipment and licenses. But as we always do in the show, well, what we do in general is that we take a holistic view of the entire company in terms of the kind of growth they have seen, the top line, bottom line, through the income statement. We talk about the balance sheet, cash flows, as well as return ratios. And among many other factors, we also highlight shareholding, street credentials, street coverage, as well as valuation picture to give you an idea about how the company has done. And we also give these companies a thumbs up or a thumbs down in terms of ratings, and then we total it up to tell you what the company is all about. So, well, of course, in this case, to assist me with taking you through these many parameters, we have with us who's Rucha, who's also going to take us through everything that we need to focus on as far as Orion Pro is concerned. Rucha, thanks for joining in. Let's start by taking a look at the growth for the revenue and the bottom line, how things panned out here.
Right, so as you rightly mentioned, this one is a software company and has really done well. But let me straightforward move to the income statement for FY24. Revenue is at around 887 crore rupees, which implies a 3-year CAGR, that is compounded annual growth rate of 33%, which is a very healthy number. EBITDA is at around 190 crore, implying a 3-year CAGR of 32%. Well, profits are at 143 in FY24, but mind you, in FY21, it were a net loss, negative of about 90 crore, moving on to positive 143 crore in FY24. So income statement check is a clear thumbs up, Agam.
Right. As far as the balance sheet is concerned too, it's on a steady footing, because if you consider the shareholders' equity, that stands at 54 crores, but which is not a very large amount. But when it comes to its gross debt, that stands at around 23 crores, which is very small, as against cash reserves standing at around 330 odd crores. In fact, even on a net basis, its cash stands at around 309 crores. So when it comes to the balance sheet, there doesn't seem to be an issue at all. And it does seem like there's a pretty steady flow and state of the balance sheet. But what about the cash flow statements, Rucha?
Right, so cash flow is healthy over here. If you look at the CFO of FY24, it came in at about 160 crore positive versus 40 crore positive in FY23. But there was slight bit of disappointment when it came to the second quarter numbers actually. But that might not give the investor a whole perspective, Agam, because it is a midway. So if you look at financial year performance, healthy cash flow based on FY24 performance.
Of course. So as Rucha was pointing out, mid through the year, Because the year is still in flux, there we tend to see not the complete picture, which is why we're not giving you the September numbers, even though the companies do report September numbers. But because of the fact that cash flow from operations for the past 2 straight years has been positive, we're going to give that a thumbs up as well. And from there on, we move on to return ratios. Now, return ratios are healthy. They're not bad at all. So return on capital employed is 19%, return on equity is 20%, and the reason why we're giving it a neutral rating is because a very strong, return ratio would be well over 25% for both ROCE and ROE. In this case, this number is not unhealthy, but it couldn't be better, which is why if we just go by the thumb mark, we're going to give it a neutral rating. But shareholding as well, I believe it's well held in general.
Yeah. 27% promoters, so good kind of free float is what we could see over here, around 78% free float. But let's break that down to domestic institution holding, around 3% of domestic institutions, as we can see on our screens, and foreign institutions of about 14%. So healthy mix, not too much of promoter holding, and free float on a healthy scale.
Yeah. Okay, and we move on to street credentials then. Well, it's done reasonably well. So firstly, in the last 12 months, it's given you a return of 56%. Its dividend payout is not very high, but I wouldn't put it against the company because this is in growth phase. So naturally, it will want to use all its profitability back into investments into the business too, which is why we'll give it a thumbs up given the kind of 56% returns in the last 12 months. But street coverage is, not there in general yet.
Yeah. So no one actually covering this stock on the street. I don't know why, but I think potential healthy returns could be a trigger for analysts to have this stock under their coverage.
Yeah, we must remember that in terms of absolute size, the company is not that huge. So while and as and when we do start seeing, a little bit more of coverage from, some of your relatively smaller names, even sell-side brokerages for that matter, and then eventually, of course, you will start seeing a little bit of more institutional play as well. And, not to forget that in terms of foreign institutions, they still hold 14%, which means that I'd reckon at some point in time down the line, we will start seeing a lot of these buy-side analysts also cover stocks. And that's when you'll start getting ratings as far as the street coverage is concerned. But for now, given the fact that it has no street coverage, we're not going to give it a negative rating, but we certainly will give it a neutral because we have nothing to work around with. But finally, moving on to valuations, Rucha, how do things look there?
So all of the things which we right now talked about was largely thumbs up for the company, but this could be slight bit of disappointment because valuation is at 57 times last 4 quarters. Now here we cannot take FY26 PE because we don't have the analyst estimates for FY26 EPS. Therefore, let's look at the last 4 quarters EPS. Based on that, the PE ratio comes at around 57. And comparing this with someone like Oracle Financial, 48 times, which is also very high, but still Orion Pro is higher than OFSs as well. Birlasoft, someone who's covering software services as well and product services as well, at 25 times. So valuation is too high for this company, maybe because of the recent stock rally is what we could see over here. So this, therefore, we've given a thumbs down on valuation because it is expensive.
Right, fair enough. Okay, so that's as far as valuations are concerned. That brings us to giving the company a total. In general, if you consider all the thumbs right now, the income statement, the balance sheet check, cash flows, return ratios, and among the other factors, we have the shareholding along with the way the stock has moved in terms of street coverage as well as the valuation picture. Well, this brings us a total to around 6 out of 8, which isn't too bad for the company its size. That's the overall ratings that we have had. But we must remember that this is not forward-looking. This is a rating based on what the company has done. Of course, as far as forward-looking statements are concerned, we'll come to that because we're actually going to talk to the management to tell us about what's in store. But before we go to the management, let's also very quickly consider the strengths, the weaknesses, threats, and opportunities for the company too. And I'm going to start off with strengths. So the strength, what potentially could be seen is as we're looking at a little bit of recovery in the banking space. then the fact that the company has low debt doesn't exactly work against it. In fact, that's a tailwind for a company. In terms of weaknesses, again, the cash flow generation has been patchy, it's been volatile, and the shareholder payout is also relatively weak. We must also remember that as far as the shareholder payout is concerned, the promoters only own about 27%. The balance is held by the public at large, and which means that this could be another one of those aspects that could work against. But what about opportunities and threats, Prucha?
Right, opportunity is number one, low competition, because we don't have a direct competitor, as in, software services, there are so many competitors, but in the product sides, there are very limited players over here. Next one is the rising IT adoption by clients. As we could see the recent commentary, IT is growing. CY24 was the year for IT. So that is one of the points. And expansion in US, which is currently just 7% of the revenue. So it drives majority of its revenue, as Agam had mentioned previously, from India. So US, which is currently 7%, could also be an opportunity for expanding over there. But threat could obviously be the geopolitical and macroeconomic risks, which were weighing heavy since past couple of quarters on various IT companies, be it software or product services. And also the big IT clients might foray into the products business as they are foraying into ER&D space as well. They might foray into products business, and this could be a potential threat to Orion Pro Solutions.
Yeah, well, even in terms of the latest news, from what we understand is the company's acquired a Paris-based firm called Phoenixis. This isn't a very large acquisition. It's for about 90 odd crores, but it gives you an idea about the kind of strides that the company is looking to make, the kind of markets that it wants to address. This specific one is a Paris-based company, as I've already mentioned, and it actually caters to the fintech space, and it will help Orion Pro while building out its footprints in Europe as well as the Middle East. And on the back of that, we've seen a little bit of rally too. Moving in. It does seem like the acquisition itself, at least as far as news reports are suggesting, doesn't seem to be very, very expensive. The stock itself, of course, has consolidated over the last 3 to 4 months. It has made a life high of well over 1,900 rupees per share. At the moment, it moves around 1,730 odd rupees per share, and it does seem like it's taking its time. But you must remember that we've seen this consolidation come in after a bout of a handful of very strong earnings trajectory in terms of your quarterly earnings. And that has actually led to some very, very sharp moves coming in, because I'm looking at where the stock was trading at around exactly last year, and it was somewhere around 800 and 900 rupees. So the stock has doubled from the last year as well. In any case, speaking of the outlook, let's now put the focus on the management and listen to what they have to say. We earlier caught up with Ashish Rai, Global CEO of Orion Pro Solutions, and here's what he had to say about the company's growth prospects going in. Listen into a slice of that conversation.
We've now grown at 30% plus for the last 4 odd years. The guidance this year is again to go north of 30%. I think we feel good about it. For the first half of the year, we've sort of paced well. The order book is in a great shape. Most of the strategies that we put in place in terms of expanding into Middle East, growing out the channel in Southeast Asia, building out the banking product stack, the closed loop global loop sort of transformations in the US, I think all of it is tracking well. So we feel good about delivering the 30% plus growth for the year and driving EBITDA within the guided range.
Okay. So talking about EBITDA, let's talk about what kind of range do you expect achieving going forward, especially in FY26, because FY25 is about to end. If I look at your quarterly trend or the year-on-year trend, okay, let's talk about the first half of FY25 versus 24. There was a slight bit of decline in terms of margin. So what kind of margin are you targeting? And the levers is what I'm looking forward to.
Yeah. So, Rucha, I think margin band-wise, we guide a band of about 2%. So we said EBITDA this year will be between 20 and 22. We feel good about sticking to that range. At our pace of growth, when the business is growing at 35-40%, it's hard to really guide the EBITDA margin down to a fine point. So I would not read too much into margins either going up or down from one quarter to the next. By and large, we will stick to the band, and within the band, it may be up or down where it is. And then once in a while, it may be even outside the band, but that's got a pace. The pace at which you're building new product out, the pace at which you're delivering new projects. We just expanded into Middle East. We announced 2 back-to-back wins in Saudi Arabia. On the transit side of the business, we expanded into Europe. So there is a lot of, sometimes expense gets front-ended. By and large, for the full year, we will definitely stick within the band. And if it goes up and down a little bit from one quarter to the next, I would not read too much into it.
Okay, so 20 to 22%, just trying to make a sense over here, 20 to 22% would essentially mean a flat or a degrowth in terms of margin. So I just want to understand the 30% kind of revenue growth, what the company is achieving, that is not essentially converting into margin, is it? So what kind of expenditure is weighing heavy on the bottom line?
Yeah, so no, I would not really count it as a degrowth in margin. So by and large, there have been quarters where you've gone slightly above 22. There have been quarters where you've gone towards lower end of the 20. But by and large, I think we've been at about 21%, give or take. So I don't think it really has changed much. The way to look at our margins is this. Obviously, as the software side of the business scales up, as the tech platform side of the business scales up, there is the profitability in the business improves, but we have been stepping up our sort of spend in R&D over the last few years. It's gone up. 3 years back, it was at about 60 odd crores level. This year, it will be, I think, slightly north of 110 crores. So somewhere in the range of between 9 and 10% of the top line is going into R&D right now. We do not really capitalize any R&D, so all of that is expensed out. The commitment, or rather the plan that we have, which we've been fairly transparent over the last several years since we pivoted the business, is that the profitability of the business as the various software businesses scale will improve. For the next 2 to 3 years, we'll try and keep EBITDA margins between 20 and 22. And as the profitability improves, we'll pour the excess back into the R&D budget. So you'll see the R&D expense climbing up year on year. We'll have more products coming out. We've got a lot of investments around payments, a lot of investment around AI. So you'll see the R&D bucket going out, and we'll have a lot of enablement of newer and newer markets for our software as we expand, right? So for the next 2-3 years, I will say margins will remain more or less in the band that we've said, and the R&D expense bucket will keep on increasing year over year.
Right. Okay. So the excess profit actually goes into R&D, and you expense all of that out instead of capitalizing. And just very briefly, is this your long-term plan, or are you maybe looking forward to reduce your R&D spend and then growing more profits in next 3 to 4 years? Your very, very brief plan.
Yeah, Rusha, I think the idea is to keep on expanding into newer markets. So I believe the headroom for growth, the size of the opportunity in front of us right now is so large that we will have to keep spending on R&D to maximize the long-term value for the shareholder. As and when you get to a stage where we mature and the growth rates come down, I think that will be the time to think about it. That's not in the next few years.
Okay, sure. Okay, good luck. Actually, it's good if the company is expanding and you are actually spending or R&D over there. Fair enough. But let's move on to talking about a little bit of segmental change, because this is what is weighing heavy, especially on the IT software companies. BFSI, that is the banking space, which is actually seeing green shoots. Many companies are seeing green shoots over there. And you also had mentioned last time that BFSI is picking up for you. But the recent earnings commentary by Accenture actually reveals that discretionary demand is still under pressure. So how do you reconcile this one for your investor? Number one, looking for demand in the BFSI space, and number two, discretionary demand yet to pick up. Is that impacting Orion Pro as of now?
Yeah, so I would not really compare ourselves to services vendors like Accenture and all. I think so we are an enterprise tech player. We provide enterprise applications, enterprise software. We provide platforms. We provide payment systems. I think since we pivoted the business 4 years back to try and build a global products and platforms player, rooted in India, of course, but playing at the global stage, the goal was to build out tier one products in areas where we can see the demand runway, where there is a transformation need going on, whether it's closed loop to open loop transformation on the transit side, whether it's transaction banking transformation. So where we play, we see a very, very strong demand in the banking segment. Almost 70% of our business is some element of BFSI. We see a very strong demand in transaction banking. We see a very strong demand in corporate lending. And you also see a lot of movement where banks are moving away from custom software into enterprise products, into mature enterprise products to bring in the best practices the way that we make, right? So I think we don't see any slowdown in demand momentum. I don't think I understand enough about Accenture's business or the IT services world in general to really be able to comment on spend around that. But we do see a movement from in the areas we are in. We do see a increased demand for products, right? I mean, both the segments right on.
Right, got that. Okay, so your sale of, so broadly for our viewers, the company actually operates in two different segments, the software services and the equipment and product license over there. Correct me if I'm wrong, Ashish, but majority of your revenue comes from the software services side. Even the margins over there are very healthy. If I look at the September quarter, around 79% of the margins is what we clocked over here. So this kind of mix,